I'm not a teacher. I'm just a trader, just like you. In this series, you're going to watch the real journey of passing a prop firm challenge from zero, with a beginner trader. I'll keep buying prop firm challenges until I pass one. And this challenge won't end until I make my first payout. Why should you watch this? Because I'm not pretending to be a professional trader. I make the same mistakes you probably do. I've failed more than 15 prop firm challenges. But those weren't failures. They were stepping stones. I bought this challenge last week. Then I took 4 losses in a row. But this time, I didn't make the same mistake I always used to make. I simply stuck to my trading plan. And that's when I realized it was time to start sharing this journey on YouTube. Alright, let's get into the analysis. I trade on the 1-hour time frame, and I focus on EUR/USD and AUD/USD. Just like always, let's get into the analysis. My goal is simple: protect my capital, follow my trading plan correctly, and grow the account. On the 1-hour time frame, the downtrend is weak now. But why?
Because earlier the downtrend was strong, then this level got broken, and after that, the trend shifted into a weaker downtrend. On the 30-minute time frame, the trend is a weak uptrend. If you look here, the market dropped strongly to the downside, then reversed and moved back into a range. On the 15-minute time frame, we also have a weak bullish trend. Now I draw the Fibonacci from where the market started this bearish move to the lowest point it managed to reach. The 23.6% level was completely ignored. The 38.2% level acted as resistance multiple times, with several rejections. And the 50% level had a minor touch, which also pushed the market back down. Now let's talk about why I took this short trade here. One of the main reasons is that a fake breakout happened. The market tried its best to break this level, but it didn't meet the 3 required conditions. First, this candle should have closed more than 50% above the range high, but it didn't. Second, the candle should have strong momentum, at least similar to the last impulsive move, but it didn't have that strength. Third, it should have cleared the previous wicks, which it failed to do. And even if this level had broken properly, I still wouldn't have taken a buy. Because as long as the 50% Fibonacci level is not broken, the trend has priority in my strategy. My entry was based around the minor 50% level, but I was a bit late, because the market could have still broken higher. So I waited for the fake breakout to form, and then I entered the trade. My stop loss is placed above a valid minor structure and above the 50% Fibonacci level. And my take profit is set at the previous range low, because if price reaches there, there is a high chance of a breakdown, especially after this failed breakout to the upside. So this trade is fully based on my plan, not emotions. Now let's move on to AUD/USD. And this pair is actually very similar to EUR/USD. Market structure. On the 1-hour time frame, we had a range breakout, and then price moved into another range. On the 1-hour time frame, the market is ranging, and the previous trend before the range was bearish. On the 30-minute time frame, it's the same situation, also ranging with a prior downtrend. But on the 15-minute time frame, we have a weak bullish trend. Now let's place a Fibonacci on the chart. If you look closely, the market is constantly moving around the 23.6% level. It even created a breakout, but it turned into a fake breakout. Now why didn't I take a buy here? There are 2 reasons. First, the 50% Fibonacci level hasn't been broken yet, so the trend has priority in my strategy. Second, EUR/USD didn't give a buy confirmation. So I decided to take a short position around the 23.6% level. But this is a very high-risk trade. There are a few reasons for that. We also have a major news event today. The market already broke the level once with proper conditions, but it failed and turned into a fake breakout. So this makes the trade even riskier. My stop loss is placed above the 38.2% level. And my take profit is at the bottom of the range. Both trades currently have a 1-to-2 risk to reward ratio, which is acceptable and worth the risk. So yeah, the trades are now set. From here, there is nothing more I can do. We just have to wait and see how the market reacts. I'll break down the results in the next episode.